The numbers are in for legacy auto in 2022, and it does not look good. I've compiled a bunch of data sets that I think paint a very clear picture for the auto industry into the coming years. And for today's video, I'm going to sit down and try to put all these together to try and predict where the auto market's going to be in the next couple of years. We'll start with this chart that was published by CNBC a couple of days ago. These are the top 10 cars sold in the United States in 2022. This is sorted from the most sold units to the least sold units. We start with the Ford F1 Series, Chevy Silverado next, Ram pickup truck, so on and so forth. If you look at the third column, which is the delta versus 2021, essentially the growth of 2022 versus 2021, you will notice that 9 out of the top 10 vehicles have actually come down in sales in 2022 versus 2021. The sole exception in that list is the Tesla Model Y, which actually grew 32% year over year. As a whole, the top 10 cars sold in the US in 2022 is down 8.6% from about 3.8 million in 2021 to roughly 3.5 million in 2022. Here are some headlines that talk about this decline. Honda just saw its largest sales decline ever in 2022, down 33% year over year. Wild. This is from Car Dealership Guy on Twitter, @GuyDealership. I highly recommend you follow him for legacy auto information. This is a headline from Reuters, your favorite media outlet. Stellantis to indefinitely idle Illinois plant cites EV costs. And this headline is very confusing, especially in an age where deflation is starting to take hold in the supply chain. If an automaker is citing high costs in a deflationary environment, this doesn't bode well for their ability to ramp the EV production line in the future. From a total cars sold perspective, in 2021 versus 2022. 2021, there were about 50 million sales. 2022, roughly 13.9 million sales in total in the US, which is roughly an 8.1% drop year over year. And it's very important to keep this in mind. These are cars that are sold to dealerships, not cars that are sold from dealerships to the customer. And this decline is in a year where empty lots were commonly cited. Here's a headline from January 3rd, 2022. At the beginning of last year, our industry has changed. High demand, low volume leaves dealership lots empty, but cars are still available. And so this is super important. At the beginning of 2022, there were a lot of reports of empty dealer lots, meaning that there were a lot of dealerships that didn't have any cars to sell to customers. However, in that same year of empty lots, you now have a car industry that has sold less cars in that year versus the previous year. So you have less sales into empty lots, which is a red flag within the context of what healthy supply looks like in the auto industry. The source of this data set is from Cox and Wolf Street, and each vertical bar that goes up and down is an individual car brand. So you start with Toyota at the top, then Kia, Lexus, so on and so forth. The length of that bar is how many days supplies are in stock at the end of November 2022 for each one of those brands. That bar in the middle is the healthy supply, which is 60 days of supply on average. And you can see from this chart that most automakers in the US that sold to dealers were either at healthy supply or significantly above, like Buick, Jeep, and Infiniti. And so again, this is a very important point to reiterate. You start the year with empty lots. You have less sales in 2022 versus 2021. And your dealer lots are ending the year either at healthy supply or more than healthy supply, which means that people are buying way less cars out of dealerships than the manufacturers are selling to the dealerships, which is causing the increase in supply that you see on this chart for each one of those brands. Now, one of the common talking points as to why this is happening is because the auto market is cyclical. Here's a quote from Google. The auto industry is also known to be cyclical as car purchases can be easily delayed when households and businesses are short of cash. And so if we go with that theory that we're entering a recession and less people are buying because they're in a cash crunch, then one could say, well, this is par for the course. This is supposed to be happening. It's cyclical. This is just what happens. So let's assume that's correct, and let's actually assume it is cyclical. What will be the next cycle? And here is where it gets super bleak for legacy auto. I'm going to show you some data sets that I think describe what the next cycle is for the auto industry. This is a chart that's showing the UK new vehicle sales, battery electric vehicles versus ICE or ICE cars, which are gas cars. The darker blue dots at the top are the ICE market share, so the gas car market share. All the way at the top is 100%, and all the way at the bottom is 0%. The light blue dots at the bottom is the pure battery electric vehicle sales. So it starts at 0% in 2016, and you can see it's increasing over time through 2023. Each dot represents a month. You can see that in 2019, gas car sales have started to come come down significantly up through 2023, ending the year in 2022 at roughly 79-78% of all new cars sold in the UK being gas cars. And you can see on the flip side that the battery electric vehicle is rising very sharply, especially from 2020 to 2023. In 2020, you can see that we're roughly 5% of the total market share, and in 3 whole years, it's gone from about 5% to over 20%. And if you look at the lines as they get further and further out, you can see that it's freaking dogs. And if you can see the lines, the more further out we go, you can see that it's starting to accelerate its downward trend for ICE and its upward trend for battery electric vehicles. And these lines are following very, very closely to the disruption S-curve. You're probably familiar with the concept, but the thought process here is that the beginning part of a technology takes a little while to adopt. And as you get further into the adoption, you have this sudden change and this very quick uptake in that new technology. And so if we take that same chart that we just looked at and extrapolate out what this looks like through 2030, you can see that the trend for the BEV, if it follows the same trend of disruptive technology, shows you that this change is going to accelerate quite dramatically in the next few years. Meaning that if the UK is a good representation of what's going to happen to the BEV market, that battery electric vehicles are going to be adopted much faster in the coming years than they were in previous years. Which also implies that gas cars are going to come down much faster than they have been in the past. But this is not just a UK trend. I have a tweet here from Matthias Fons. The Tesla Model Y was the best-selling vehicle in Taiwan in December 2022. Notably, the Model Y had more sales than the 2nd to 5th best-selling vehicles combined. And so this is a data point that shows that electric vehicles are being adopted very, very quickly, not just in the UK. And if you remember the chart that I showed at the beginning of the video, you can see that the same trend is happening in the US. Every single one of the gas cars in the top 10 cars sold in the US in 2022 were down year over year, while the only electric vehicle in that list is up 32%. And this is a different way of looking at it. If you look at the total sales in 2022 versus 2021 in the US, you can see that Tesla as a whole is up 44%, while every single other automaker who predominantly make gas cars are down, and sometimes significantly. And one of the reasons that could be feeding this sudden change is that folks are realizing how much cheaper it is to operate an EV versus a gas car. For example, Hertz had a study where they discovered that electric vehicles that they own are between 50 to 60% cheaper to maintain than gasoline-powered cars. And so there's likely a lot of substance behind this EV adoption. There are so many other data sets that are describing this decline in legacy auto and gas cars and this uptake in electric vehicles. I'm compiling a lot of these on a thread on Twitter that you can follow. And if you're enjoying the content on this video so far, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you very much. But I'm quite convinced if there's a next cycle for the auto market, that it is going to be the transition to battery electric vehicles or pure EVs. And so the question becomes, which are the players that are best positioned to capitalize on this transition into the coming decades? And is legacy auto prepared to be a player in that transition? Here's a chart from EV volumes that describes the first half of 2022 sales by brand. You can see at the top, you start with BYD, then Tesla, Volkswagen Group, GM, etc. And it's separated between the green, which is the battery electric vehicle, and the PHEV, which is essentially a hybrid. You can see that BYD sold the most units in the first half of 2022, but half of those were hybrids. If you start looking down the list, you can see who the players are that are actually making battery electric vehicles in volume. BYD is a Chinese company, Tesla is based in America, Volkswagen is in Europe, GM is in the United States, so on and so forth. And to make it easy for you, I've taken every single one of those brands and I've put them in 6 specific buckets. China is any brand in China. Tesla should be pretty self-explanatory. Legacy US is any of the brands that Ford, GM, or Stellantis have. Legacy EU is Volkswagen, BMW, Mercedes, etc. Legacy Asia are brands like Toyota, Mitsubishi, Nissan, etc. And other is that other bucket that was on that list. What's very important here is that China and Tesla have more battery electric vehicles than the rest of the auto industry combined. If you look at the chart here, China is 37% and Tesla is 18%. This means that out of all the battery electric vehicles that were sold in 2022, China and Tesla combined are roughly 60% of the total. Can't do math. What the hell is that? They're roughly 55% of the total. Math. And these are the companies that are growing the fastest versus everybody else in this pie chart. What's also very interesting is that a single company in Tesla is making more battery electric vehicles than the whole legacy US combined, the whole legacy EU combined, or the whole legacy Asia and other combined. But you can also see that as a full region, China is making twice the amount of EVs than Tesla is on its own. This means that if the next cycle is battery battery electric vehicles, China and Tesla are by far and in the best position to win market share. Let's do a very simple thought exercise to see where the car market could be in 5 to 10 years using some very conservative assumptions. Given the last few years, Tesla, China, and the other brands have grown at a very steady pace that's easy to track. And so if we assume a conservative growth into the future for each one of those segments, you can start to see what the picture is going to look like in the next 5 to 10 years. Given the speed of innovation, manufacturing, investment, and the culture that the Chinese companies and Tesla have, it's reasonable to assume that China brands and Tesla will grow 30% on average year over year for the next 5 to 10 years. Given that legacy auto is going to be much more bloated than Tesla or any of the Chinese brands, they're not going to be able to move nearly as fast. And so in the best case scenario, legacy US is likely to grow 20% year over year. Legacy EU has a lot more barriers. They have a much different culture than in the US, and these brands have been growing a little bit slower than other brands. And so that's why I'm pegging 15% for these brands. Legacy Asia, so brands like Toyota, Nissan, and so on, have been very unwilling to really invest in EVs into the coming years. And they also have very different cultures around innovation and switching up what they work on. And that's why I'm giving them a 10% growth rate for the next 5 to 10 years. And then other, I'm going to assume these are newcomers coming in and they're going to be hair on fire, going like crazy. So I'm going to give them a 30% growth rate on average for the next 5 to 10 years. If those assumptions are correct, this is what the BEV market, the battery electric market, will look like in 5 years. China will be roughly 45% of the total BEV manufacturing in the world, Tesla at 22%, legacy US at 11%, legacy EU at 8%, legacy Asia at 5%, and everyone else at 7%. This would be on roughly 20 million BEVs per year. And here you can see that China and Tesla would both become 2/3 of the total electric vehicle market in 5 years. And if we go 10 years into the future with those assumed growth rates, this is what the market looks like on 60 million battery electric vehicles sold in 10 years. And this implies that China and Tesla combined would have 3/4 of the total battery electric vehicle production in the entire world. And this is where it gets bleak for legacy auto. If those assumptions are correct, the entire legacy US would have to figure out how to share 5.2 million cars between each other. GM on its own in 2022 sold more cars than that total number for legacy US. Legacy EU, between all those brands, BMW, Mercedes, Volkswagen, etc., would have 3.2 million cars between all those brands. Whereas Volkswagen alone in 2022 sold well above 5 million. And this is the craziest one. Legacy Asia would only have 1.6 million between all those brands. Your Toyota, Nissan, Mitsubishi, etc. Toyota alone sold almost 10 million cars in 2022. And so it's very easy to see that if the next cycle is electric vehicles, legacy auto doesn't seem well equipped to be able to sell into this new market. And that market share is going to be stolen away by Tesla and Chinese brands, given their growth, their investments, and the cultures behind those automakers. And when you have legacy car companies like GM and Ford that have upwards of $100 billion in debt, not to mention decades of management being layered on at those companies, a culture of bureaucracy and unwillingness to change quickly, what does this mean for the future of legacy auto? If these numbers are true, it obviously doesn't look good, but I would love to hear your thoughts in the comment section below. If you thought this content was informational and valuable, consider supporting the channel either through Patreon or through YouTube right below this video. You'll get access to our private Discord where we have an awesome community where we talk about these topics and many other topics as well. And if you'd like to support the channel by purchasing some merch, just like the shirt I'm wearing right now, consider doing that as well in the description. Thank you so much for watching the video. I hope it was valuable and we'll see you in the next one. Take it easy, everybody. Bye-bye.